Hello, crypto world. Monday, midday in the United States, and it's already Tuesday in Asia. And the equity market has backed off. Remember the huge rally on Friday, so I don't find this remarkable, nor is the magnitude of the back off significant. You have the Dow down less than 0.5%. And interestingly, we have the tech-heavy NASDAQ up, not a lot, but primarily because Nvidia is reporting its earnings on Wednesday. And my take is that I don't think people want to be short going into Nvidia's earnings, and the, if you will, correction from the Powell rally, which was so dramatic, is mild. So they are protecting themselves by covering their shorts in Nvidia, and there may be parties getting long. And yields have gone up, and the bond market is basically doing the same thing, giving back some of the yield reduction that occurred on Friday because of Powell, but it's not dramatic. And in crypto, we are in red land across the board, even in the case of Ethereum, which was knocking on the door of 5,000. And even though it's down almost 4% today, it's still up 7% on the week, so I am not taking away my enthusiasm for Ethereum because of this, I call it a correction, and there is some really remarkable news that is, if you will, double-edged. As we all know, there are a lot of crypto ETFs that have been filed. Well, and they're all appears going to be effective starting in October. But something new has developed. The nature of the ETFs are not just with individual cryptos. There are crypto-based ETFs that will be active ETFs, i.e. they're not just going to hold an individual crypto, they're going to trade. That's one type. The second type is we're going to see leveraged ETFs, so that it will be 2x on Doge and 2x on SUI. This is pretty remarkable, and that suggests that we are getting, if you will, more mainstream acceptance and a lot of active trader, higher risk people looking to trade ETFs based on crypto. Now, I mentioned before I described the ETFs that this was a double-edged sword. And the reason it's a double-edged sword from my perspective is when high-risk assets like crypto get ETFs that are even leveraged or 2x, that says that the high risk is even higher in the ETF. And that sometimes is a bad sign of what can happen in the market, because when it, and if it does, and all markets don't go straight up, reverses, we could see a greater meltdown than we would have otherwise. But bottom line, we are today red across the board. I don't think this changes anything. I believe this is a follow-through of the correction after the Powell run-up, and we're going to have to see what happens with Nvidia. And the biggest news with respect to financial information is coming out on Friday when the PCE is released, which is the most important indicator the Fed uses, which will in effect either confirm the idea they're cutting in September or throw cold water on it.